welcome everyone to the next edition of the FINtastic Talks. Thanks for all the love and affection that you have been showing. We are now over 1.3 million views, which is a great testimony to your love and affection, and thank you for that. And I always like to start with gratitude, and my gratitude to all of you to watch it, on YouTube, to watch it again, to recommend it to people. Thank you. We really appreciate it. And as we are building on this journey to help you build a second income or a second version of yourself, which is your passive income, which is one day as big as you and can support your current income, is our aim. And I always explain the difference of between being rich and wealthy. Rich is a person who has money. Wealthy is, but if the person has 1 crore rupees and is spending 10 lakhs rupees a month and has no fresh income, then in 10 months he's going to be broke. Wealthy, we say, when a person has enough money for his rest of his lifetime. And that's what we want our clients and those who watch this podcast to be reach. And we hope we are able to help you get there. One of the ways a lot of people ask me, look, I'm a new person, how do I get into this? I find it too daunting, or I have been taken for a ride by some agent or wealth manager or banker. I don't have the trust. Guys, if you're sitting on the fence, you'll never win the race. So point is, we have to win the race, and we have this program called FINtastic Education Program, which is a 15-day program which teaches you basics and essence of managing your money. If you have more time, then you do CFP, Certified Financial Planner, which is a global program, and it opens many more avenues to you. So if you can do CFP for both, you go to International College of Financial Planning or ICOFP, and you can get more information. And I would highly recommend that. Because, even if you don't want to be a finance professional, but if you understand how to manage money, then nobody can take you for a ride. And money is your most important asset. And tomorrow, if you're able to build enough corpus that is able to match your current income, that's when you have built out truly great second income. And you can live a great life despite of whatever happens. We have seen COVID was great for some people, was bad for others. So we have to be careful on there. And today, after a long time, we are back to life insurance. And we have Satishwar from Aegon Life Insurance. And it's going to be a very interesting talk because, Aegon is a digital first life insurance company. Now, a lot of people, when they hear digital first, they don't truly understand what it means. So it'll be great for us to understand. And he himself is a very interesting person, who's moved from being a chief financial officer to being a CEO, which seems to be the latest trend. Satishwar is there, Vibha is there, and both of them are doing a fantastic job, I'm told. So we are quite excited about our today's program, and I'm happy to welcome our speaker to join us with us today.
Hi, Sanjiv. Thank you. Thank you very much.
Yeah.
In fact, Sanjiv, just before we get started, let me actually congratulate you on actually initiating this whole exercise, this process. I think wonderful job being done. And I would like to take this opportunity on behalf of all the visitors here, right, viewers here, because it's helping immensely in understanding or demystifying the whole piece of finance, right? It's difficult for us or for a lot of people to kind of manage wealth or understand wealth or create wealth. I think you're doing a wonderful job there. So congrats.
Yeah. And also, what has happened is that it helps people understand the CEOs who are running their companies also. In fact, it's the most watched program by the CEOs. So every CEO, whenever I do a program, I get comments from all the other CEOs. Okay, he said this, I said this. So for an industry, we realize that we know each other, but we truly don't know each other. We know each other from on a very shallow, or maybe couple of people who we have known from the past will know them in deeply. But otherwise, we really didn't know the leaders who are running the financial services industry. And, as a coincidence, this has helped us understand the leaders. And I think that's what I'm very excited about that. So, Satishwar, the way
we also thank you on behalf of all the CEOs then.
So the way we would like to start with is that we don't want to start with just let's not jump into the topic right away. We want to understand Satishwar as a person. So why don't you tell us about your parents, about your childhood, education? How did you get into this industry? What was your journey? What were your learnings? What were your up highs and lows? And where do you stand currently?
Okay, so it's actually going back a little long, right? Uh, so when I actually was born and brought up in the outskirts of Bombay. It's a small town called as Kalyan, which is just outside Bombay, which is part of the Thane district. So my dad was a government employee, central government employee. He was in the railways, so we used to live in railway quarters. So that's where, and basically school was just next to the house, so everything was within that compound. Wonderful childhood, in terms of basically because it's lavish place and very well taken care of. We childhood was largely cricket. So was majorly used to play cricket a lot. In the sense, was also representing school. Used to bowl pretty well. Not a great batsman, but used to bowl pretty well. So that's where it kind of didn't pursue a career there, but could have tried. But I think there are too many people trying that, so wouldn't have standard a chance. But still, I think it's a wonderful piece to have happened. uh, Basically did my from an education perspective, did commerce, did bachelor of commerce, and pursued my CA course. So I'm a chartered accountant by profession. So that's by qualification. That it happened in the year close to 1998. uh, was continued with the articleship, the extended articleship for a while, and then that's when the life insurance industry opened up in India from a private industry perspective. So it's in year 2000, kind of when I joined ICICI Prudential as an entry level manager, right? So part of the finance team. And the best part at that point in time was across the organization, all the way from uh, top to the bottom, including Shika herself, we were all learning insurance, right? So because insurance was new to all of us, including the accounting, because insurance accounting is a little different from the conventional one. So that was coming through. So a lot of things which was new to all of us, and everybody was more or less at the same level as far as understanding the business is concerned. So that gave an immense opportunity, which I was with them for close to 7 years. The first 7 years of opening up the insurance industry for the country from privatization perspective. So was with them till 2007. Uh, from to the In 2007 is when I moved to Reliance Life for close to 2 years with them, and 2009 is when I joined India First Live as a founding member. When we started the organization, it was called as Baroda LNG, which is basically Bank of Baroda was the major shareholder, along with Legal and General and Andhra Bank. So that's where. But sooner, before we went live, we renamed the organization as India First Life Insurance. Was with them for close to 10 years, which is basically part of the finance team for the major part of the tenure, but took a detour, say 7 years down the line, which basically I moved into handling ops and IT for a while. And that was my first stint into major transformation project as far as using tech is concerned. So we actually moved into a space of using the tech enabled frontline. So the whole front end team moved away from a paper process to a paperless process, which was a tab based process. So we introduced that process at that point in time, and I was front ending that project. So what did that, and while we do that, it's not just so the biggest realization at that point in time, a tech project or a transformation project in terms of going digital, it is not just tech. Okay, it has to have all the other ecosystem. There are various parts, so every function within the organization plays a role, and all of them will have to kind of adapt that whole space. So that was a big learning, and that's where it was. I was handling the project, so where during that process I ended up doing both ops, underwriting, and that entire customer service process, so that whatever chain comes in, the ecosystems can get connected and you are able to resolve that. So that was a big learning, and that continued for a while. And using that and is where I kind of moved into Aegon Life. So Aegon Life at that point in time, this is year 2019, post 10 years with India First. Aegon Life basically approach saying we are looking at majorly transforming the way we are doing business. So we were a conventional, there was a partner driven model. which was partner, when I say the offline partner driven model. But they kind of said we want to kind of move into digital as the new banker. So basically saying, because every other industry is majorly getting digital, and this is bound to happen in life insurance also. So Aegon said, let us take the lead. Will you join us through that? So I joined them as the CFO, considering because they wanted somebody who handles the finance part so that the overall business acumen is there, but also has done the technology transformation project, and so that he can become a much better business partner who can balance out both finance as well as the business processes. So that's where it started. But somewhere in year 2020 is when I got the opportunity to take the role of the CEO, to take the entire post into and the entire space. And that is where since 2020 we have been majorly working on this, uh, whereby we revamped the entire tech stack. So it's an entirely new tech stack. So we are actually comparable to any new a tech organization, right? For us, everything is event-based architecture. The only way to talk to us is through APIs, right? And it's a microservices architecture. So everything is very modular and very much flexible. So even the orchestration, for example, with every partner, we can have a different process. For example, the normal process, say a quote to pay or an entire process. So we can design that process with every partner can be very different, right? And even the orchestration. So that's what digital enables, and it's pretty quick and smooth. So that's largely, in a nutshell, the journeys from childhood till date. And now we are a fully digital only organization, taking it to the next level. One of the main objectives of moving fully digital was to take it to the interiors of the country. Now, this might sound like digital and interiors, but if you actually notice the Jam Trinity, that enables us to do this, right? And if you notice now, more than 80% of the adult population has a bank account, and a lot of them actually have also started using or transacting using digital means, and which was again possible because of UPI. So that's not an introduction that we are doing. I think the infrastructure or the road or the rail has been laid down, and we want to ride on that to also basically cater insurance to that specific segment using these mechanisms. So that's largely a quick uh, intro to what we are trying to do.
Yes, Satishwar, it's a very interesting story. Right from being wanting to being a cricketer to being to becoming a CFO is a very interesting journey. And from a CFO, which is generally becomes the sort of the roadblock or the last job for a lot of people, they remain at a CFO. You have moved on to being a CEO, which is again an amazing journey. And as I tell my team, the number twos who get scared when their boss quits. I always tell when the boss quits, you need to be distributing laddus rather than, because that's your opportunity to shine. So I guess you proved it right. So now taking a few questions, we have a Shankar Bala Subramanian. He's asking this question that I am 64, my income is 1 lakh per month in this market. How should I invest? So Shankar, I'll answer it a little bit. Then I will let Satishwar add in a couple of bits to this. See, point is that Shankar, don't get scared. Don't be worried about the market. Investment is a long term journey. Market will go up, it will go down. So just don't wait on those sidelines. You need to start doing it. 64, no problem. 1 lakh rupees. You need to first thing you need to do is how much is my expenses. So suppose your expenses are 60,000, you have 40,000 left. Now the first thing is that out of this 40,000, I am paying an X amount as tax to the government. Can I save that? So first thing you should do is look at your section 80C. That is there any money you can save under 80C, because that there you are saving your tax also. You are increasing your disposable income. Take care. Once you do your section 80C, then you do your NPS, which carries another separate 50,000 rupees. If you get your company to contribute, they can put 1.2 lakhs on your behalf every year, which will be absolutely be tax free. So first is that these are the products where on 80C the best product for me is either if it depends on the need. If you want to be conservative, then a guaranteed return insurance plan. If you want to be aggressive, then an ELSS scheme. And national pension scheme is amazing. It's like a balanced mutual fund, hardly any this thing. You save 30% tax or 20% tax in your income bracket. And after that, you get into mutual funds. So that's the typical way. It looks difficult. Please start, get in touch with a good firm who can guide you, and it'll be a very exciting journey. Satishwar, would you like to add anything there?
Mr. Subramanian, one of the biggest steps is basically, I think, to get started. There is never a right time to this. Okay, so it's always there. And the other big one is actually being very disciplined. Now, I like the statement which you made. It's basically income is 1 lakh every month, and I'm assuming that this is you have some residual income left after meeting your expenses, right? And that's where you need to basically be very disciplined around investing it. The one thing which I'm not very sure about is what is your risk appetite on this one. So, in terms of considering your age, are you still open to taking some bet in terms of risky investments where the upside is higher, but it can also be a risk on the capital itself? So, those are certain pieces, but irrespective, there are multiple options. So, one is you can actually look at even the savings options, which can be guaranteed products, and also certain exposure to various equity exposures, right? But it all depends on the risk appetite that you have. But the biggest piece, which as Sanjeev also said, is to continue investing. So that discipline, and if you have that money, don't let it sit idle. But the discipline of investing it every month is what can take you places. So that's what. So the suggestions in terms of instruments, which Sanjeev said, those are very much bang on. Uh, if you have some additional money on it, and if you want to take an equity exposure, is where the current at this age and specifically, it's the mutual fund which I would suggest. Large cap largely.
Yeah, I think very well answered, Satishwar. Going on to the next question, Dhruv is asking a question: if I can work for Bajaj Capital? Yes, you definitely can. We are always looking at people. We have this program, if you're a fresher, called IDWM, International Diploma in Wealth Management. We prefer to take people through that because it helps them succeed in their job. See, it's not only about me taking a person to work for me, it's me also being able to make him successful so that he's able to build a great career. Because financial services is like a cylinder. Baki industries are like a pyramid. On the top there are very few jobs. Whereas in financial services, if you're a wealth manager, you can be paid 5 lakh rupees, you can be paid 50 lakh rupees, you can be paid 1 crore rupees. Depends on the number of clients you manage. So, Satishwar, please look up IDWM for anybody who's looking for a job. I know we get a lot of this question. Generally, I don't take it. And I get a lot of comments, "Ki, sir, you don't take any questions about career." So I picked it up first. So, so, you know, uh, please look up IDWM and go that way. So now, Satishwar, coming to Aegon, people have read about that Aegon is now a digital first life insurance company. Now, people don't really understand what a digital first life insurance company means. What Indian media portrays a digital first means that it's a direct to customer company. Okay? Whereas internationally, a digital first company is a company which has all the processes digitized and has very limited offices, staff, and mainly depends on distributor, which is very contrary to what the Indian media believes.
I didn't get that. Could you try again?
So just explain to our viewers what exactly is a digital first life insurance company.
No, so you kind of bang on the way you describe the second part of the digital aspect. So yes, every time we say digital first, I normally second it with a line saying by digital, please don't confuse it with direct only. So it's not just our website that will be used for selling business or doing business. Of course, website will be available, but the larger piece is through the ecosystem. So we have, when we said we went digital, so one of the best of the examples is we have gone totally paperless. Okay. And because now and when I say paperless, we don't even want a scanned image. So that is again paper for us, right? So it's all getting digital, and there are various data sources which kind of validates those processes and those things. What also happens is because we are totally digital, we speak through API. So the integration with various partners is also through the API mechanisms, which makes the processes much more efficient, very effective, and very quick. So basis this is where, for example, for us, if you're actually looking at buying an insurance policy through Aegon Life, and if it's a high valued term assurance, then it's a two interaction process. What we're talking about is the one process where you fill in the application without any paper. Naturally, we do validate using your eKYC and those things. But the other one is the physical medical. These are the only two stages. There is no follow-ups required anywhere in between. So the entire process can be handled in a much more efficient and an effective way. We also have mechanisms where uh, the it's based on the profile of the customer. We also kind of do a process where it can be done through video medical. So again, we don't even need to get into a physical, and it can actually happen in one interaction itself, and the issuance is immediate. So that comes in. But the larger piece over here is uh, we know that from the partner, right? The distribution partner is who basically understands the customer much better. So our entire process is again catering to the distribution partner and through the distribution partner to the end customer. Because what also happens is insurance is a little difficult product to sell. Now it's not because the product in itself is pretty complex, but it is more to do with the there are two pieces, right? One is the term component in a life insurance piece, which is a very emotional subject to discuss, right? Because it's associated with death. So, for example, it's a risk management tool. So it's like, as I say to a lot of people, insurance is something. Typically, a term insurance, you don't buy it for yourself; you buy it for your loved ones, right? Yeah, and because you will independently, or I as an individual, will never reap the benefit of the term policy or the protection life insurance cover that I buy it for myself. If something happens to me, or rather, if I die, it's the financial burden which my family will face, that is taken care of through the life insurance space. And this is a very emotional subject to discuss, right? It's very difficult for any individual to get up one day and start thinking that I need to buy insurance unless until they've seen something in close this thing, or you actually need a partner or a distributor who can actually make this realization. And these are very sensitive discussions which somebody can have with the customer. The other piece on the life insurance is, again, this is your best enabler in terms of long term savings in this current scenario where people are largely looking for immediate gratification, right? Quick savings, quick immediate utilization of money. So that, of course, we should do. It's not that that is not required, but there is also a need and an aspect where people should start saving or start looking at scenarios which are, say, 10 years down the line, 15 years down the line. A classic which I normally give examples is of child education, my child's education, right? So that's a lifestyle change which has come into my life. I'm now a parent, and I should start. I know that, say, 15 years down the line, she or he will need specific kind of investment when she reaches the age of 15 or 18 because of our higher courses. And I should have enough kind of corpus created for that specific objective. And this is where the long term savings kicking coming in, and that realization, again, somebody has to kind of enable that process with the customer to realize that specific need. And this is where it is basically, we call it as a push product, because you don't normally kind of on your own think through, but you need somebody to help you understand that specific need and the necessity and the urgency to have it. And insurance actually plays this one wonderfully well. For example, the child education, right? Irrespective of whether I am there or not there, say 10 years down the line, I know that my child will need that kind of funding when she reaches the age of 18. And insurance is the product which can still enable it. Suppose if I start the corpus creation at the age of 3, when my kiddo is, when my daughter is at the age of 3, right? And while she is, say, 7 or 8, and I pass away, right? In that case, again, I am still ensured that a corpus has been created for my kiddo's education, and that education is not getting compromised. So this is a very critical aspect which comes through a life insurance product in terms of savings. You create that corpus, but in case if I am not there to tenure to take through that whole tenure, I will still ensure that my kids' education is not getting compromised. So that is where one long-term savings plus the insurance component helps in ensuring that the long-term corpus is still created for your loved ones to ensure that their specific objectives are being met.
Yeah, Satishwar, very well said. And I had actually missed this when we were answering the question of Shankar Bala Subramaniam ji. So we have to say, look, Shankar ji, I have to tell you that you create wealth by first saving, protecting wealth. Okay, so point is that first you have to protect what you have built. Because if you look at anybody who's in a financial ruin, it is due to a health emergency or a fire or something. So the most important thing is that before you start even investing, first, the most important thing you need to buy is first is your health insurance, because your health is your ultimate wealth. So you have to first buy a health insurance, then you have to buy, if you have dependents, a life insurance. Then you have to buy your asset insurance, your home insurance, your car insurance, so that whatever your assets that you have built up till today are all insured, and they are not expensive. These are not expensive covers. Life insurance also has two types of life insurance. One is the term covers, which are pure protection, which are very cheap, give a very high life cover, and then there are the bundle products which give a high investment and a low life cover. So both of them have different needs, but you initially you need a term insurance. Okay, so this is what is we are talking about. Next is that since we have been taking questions about investments and what to do, Manoj Batra has asked a question that I have a monthly saving of 5 lakhs. How much should I invest in mutual funds? See, typical example is that it depends on your risk profile, Manoj. If you're a high risk person, maybe all 5 lakh rupees in mutual fund. I would do a combination between mutual fund and NPS, depending on how much where I can save tax. Or personally, I think the asset allocation is important. So I would invest maybe 40% in a life insurance product with a guaranteed return. Today you are able to get 6.5 to 7% non-par products. So I'll choose one of the products for 2 lakhs, and another 3 lakhs I will invest in purely variable, which is mutual funds. So that will be how I built my portfolio. Satishwar, would you like to add anything there?
So I think you kind of answered it perfectly there, Sanjeev. It's very specifically because we need to understand the risk profile of the customer to kind of give that advice. But irrespective, it's the market currently with the interest rate at an all-time high. It's a good time to again secure some of these returns, right? So a lifetime, which is basically gives you a tax-free return, right, and long term. So you're kind of locking in that rate for a longer period. So that's and especially when he's talking about savings of 5 lakhs, a monthly savings of 5 lakh, which means that he's also in the highest tax bucket most probably. With that, a tax-free return coming from a life insurance policy for a longer period will be a wonderful kind of exposure that he can. And you're locking in the rate, right? At this stage for the next, what if you were to invest for say 5 years or 10 years, you're locking in the rate. So that's a wonderful investment which you should do. But as he said, diversification is also important. So 40 odd percent into life insurance product, and the balance can again get into an equity exposure, if you are okay with, if your risk profile permits that.
So now there are two questions by Radhika Gupta and Alok Mishra. So they are asking that first Radhika is asking that your claim settlement rates are very high for Aegon Life Insurance. What's the secret there?
And I take that as a compliment, and it's so see, it's more to do with the screening that you do at the underwriting stage. So we have been very conscious the way we onboard a customer, and uh, and this is where I would also like use this opportunity to say that everybody, whoever is actually buying a life insurance policy, I can basically guarantee saying if you have been very truthful. In fact, I would suggest that everybody needs to be, especially all those health questions and the income declaration, because those are very relevant pieces from a life insurance company's perspective. So if you are very truthful, there is no way that a claim can get repudiated. Okay, and we in our entire processes over the period have been very cognizant of that. So we have multiple. One is without actually making the process very cumbersome. We kind of continuously keep talking about saying why these questions are very important, and let's have a very truthful answer to it. Because whatever be the condition, there is always an insurance available. There might be certain extra charge to it in case of any specific adversities, but there is always that kind of a piece available. So that is where we have been very conscious over the last close to 13, 14 years now, where we have continuously ensured that the onboarding process uh, is very good in terms of both in terms of experiences as well as ensuring that the right profile of the customer comes in, and that is how the claim settlement ratio is always, because whatever claim comes in, we know that it's the death has happened because of something which he couldn't have helped, right? That was something not a pre-existing condition, and that is the reason why the settlement ratio is pretty high, and it will continue that way. So we are very conscious because that's the moment of truth, right? So the purpose why you buy a life insurance policy is actually for your near and dear ones. If something happens to me and if my family member, my wife, doesn't get the claim, that then this whole purpose is not solved. So we continuously keep on insisting or basically kind of sensitizing people, saying it's important that whatever we say in the process, and it's a very small process over the period. We, in fact, ours is one of the easiest one to do. So it's a very easy process, but we need to ensure that we declare all those pieces in very truthfully, and which is again known to you, and that's the only secret.
And I think very well answered. It's better underwriting the way you bring in the people. If you do your things right at the initial term, then there is no case question that the claim should be delayed. And it is also the ethos of the company. At the end of the day, we are here, for serving the public and giving them the claim when there is a need. People think insurance is for the time they buy the product. No, it's the time you need a claim. That's why I always say that buy a product through a company like Bajaj Capital or any other company that is going to outlast you, because they need to be there to fight for your claims. Even in India, 75 to 80% of the claims for our clients are initiated by us, because when we are talking to them for renewal, we understand there's something that has happened, and then we inform the family there is a product, there's a protection, this is the plan. A lot of time the family doesn't even know, because person has kept that plan in some drawer. Maybe he may have mentioned it, but the people are so distraught they don't even know the insurance is there. So it's always better to buy it through a product person who you are sure can get you a claim. So this is a very, very important, because you will not be there to fight for your life insurance claim. Please remember that. So you need to have somebody who you can trust and will fight for you. Okay, so also there is a very, very interesting question. Okay, so this is about from Manoj Batra. No, this is from Manmohan, and he's asking a question, Satishwar, that other day I was planning to buy something. I went to this company's website. Apple has two products, and we still get confused. That company had 18 products, and I just couldn't make head of tail. I couldn't decide, yaar, A lena hai, B lena hai, C lena hai. So I have actually ended up deferring the decision. So they are saying that there are so many life insurance products, we get confused. So he's simply asking you which is the best product for me.
Okay. The answer can't be very short, but having said that, there are largely so insurance. There is a saying, right? The insurance basically helps takes care of two things. One is dying too young, and living too long. Now, dying too young is where the protection piece comes in. So suppose that's what we spoke about as the pure protection or the term policy, right? And living too long is the retirement products which come. So it basically takes care of the two extremes. So if you are looking for a specific protection plan, okay, so it's it's uh, it's I would like to basically say come and look at Aegon Life's product for sure, but it's also look at the settlement ratios, and irrespective of that, what I would also suggest is term is pretty simple, right? It's a very simple product from perspective. The concern on term is more the emotional aspect, but once you have decided to buy a term policy, uh, basically look at ensure that the form filling is basically or the application is being done by you yourself. From a savings product perspective, for you to choose which product, uh, it's there is, in case if you want to take some equity exposures or market exposure rather, right, both in terms of debt or in terms of equity, you can actually look at a ULIP product. So we will, that's the reason I said I can't answer it in one go. But if you're looking at you're more risk averse, then savings product is something which comes in. And the best way to decide which product, more than understanding those various features and those things, my suggestion would be to basically look at the benefit illustration. So each and every life insurance product, when you actually look at it, they actually generate a BI. The very first step in the process is to generate a BI, right? BI at times is also called as the quote. So benefit illustration is something which basically gives you what exactly that product will deliver or give you in terms of at the end of the policy term and those things. It also basically you will have to input what are the kind of premiums that you're okay to pay and what's the maturity value that you can generate for those savings product. Or ULIP also gives you a flavor that in case if the fund generates an 8% or a 4% return, what is the kind of corpus that you can look forward to at the end of the policy term. So this BI is what you can compare and take your call, and there you should basically look at you as a customer. Whatever you on comparison of BI, whatever you best see as fitting your bill, that's the product. Because the whole insurance space is largely very well governed. So from that perspective, you're being in the process truthful in the application process, and the BI comparison is what tells you which is the best product for you. And of course, you can always take help from say the Bajaj Capital team, because they would have also analyzed a lot of products, right? And they can suggest you in terms of understanding your need. Now that is where I was saying, by asking which product to invest, unless until know what you're looking for, it becomes a little difficult to address. But broadly, these are the three product categories which I can talk about. If you're looking for more retirement piece, then it's accumulation during that piece, and annuity in case if you're looking at a monthly income plan. But largely, that's the broad categorization. Anyways, Sanjeev, you would want to address this, because with that limited information, it becomes difficult. But can't hear you, Sanjeev.
Yeah, I didn't realize I was on mute. So I'm saying, this is Manmohan. This is why brokers exist. Broker represent an insured. They don't represent an insurer. Agents represent an insurer. Broker represents the insured. So the broker will represent you, and he'll help you understand which life insurance product you need. So all you need to do is go to a broker, good broker like Bajaj Capital, give your needs in writing, send an email. I want my product will give me A, B, C, D, E, F, G, H. Give it in writing, go to a broker, ask him to recommend a product, tell him to show how is it going to meet your needs of A, B, C, D, E, F, G, H, and then you buy the product. So which is the best product for that. So this is the way you do it. Typically, the three most selling categories are term and trop, which is term and term of return of premium. That's one category. The second category, as Satishwar has mentioned, pension products are doing very well, and the guaranteed return products, which are the non-par products. These are the three main categories you should look at for your portfolio, and this is what is about. So let's take some technical questions also. Satishwar, there's Tanya Sharma. She's asking us, does Aegon Life Insurance cover suicidal death?
Of course, it does. So when I say suicidal death, and this is a universal piece, so we don't cover it just for the first year. So basically, the reason behind that is you can't plan a policy considering suicide in mind. And the normal norm is you can't plan your suicide. Sorry, anybody can't plan a suicide, say 365 days in advance, right? So the very first year is where, in case of suicide death, it won't get paid. But suicide post 1 year is very much covered by a life insurance policy.
Thanks. And there's another very technical question. They're saying that this guy is a trader. So he's saying, I'm told when I apply for a term insurance that I have unearned income. He's saying, but I'm a trader, so trading is my business. And similarly, we had come across this guy whose business is to rent properties. So he's got a few income which is in few crores in the year, but he's been finding it very difficult to get a 20-25 crore term insurance for that guy. So I don't know what's the amount here. So people who have like traders, or what the category is called the unearned income, people who are getting income from their investments or from their properties, can they buy life insurance, and what are the rules around that?
No, absolutely, they can buy life insurance. In fact, if I can just take that specific example, I think he will have enough income tax returns to prove his income, right? And that itself should work. But and this is, but if I'm actually looking at the largely the self-employed population, Sanjeev, the majority of the Indian population, which we did our last mathematics, close to 300 million, which is 30 crore people, are in the self-employed space, right? And that is insurance has largely been documentation. It has been nothing less than actually applying for a loan, and this is the exact use case that we are addressing by going digital. Now, Aegon Life specifically, and when I said paperless, this is exactly what I meant. We don't want papers. For high sum assured, naturally we will need very high sum assureds. Rather. We will need the income tax returns to come in just to validate that pieces. But for low sum assureds, we have a lot of data-driven underwriting model that we have moved into, which basically does some data analysis of the various based on your PAN and those things is what we do, and accordingly we kind of take care of that. Or it's your simple bank statement through the account aggregators. Right? There are various other touch points that we have, which we evaluate, and basis which is where we can actually cater to this specific huge population of the country who are self-employed, who have not yet reached into the income tax bracket, but they still have enough income, and naturally they need insurance cover for that specific profile, is what we now cater to through the digital means of actually selling a life insurance, where we don't need a paper documentation. I think what he referred to was is unable to prove documentation, right? And that is exactly what we are taking through various other data sources, where we validate the need for the insurance and his health and living style or the living standards. So what do we do when we do this underwriting, right? And this is a risk mitigation tool, right? Life insurance, especially the protection, is basically in case if something happens to me, my family's financial needs are taken care of. So we as an insurance company are also looking at that it is not an anti-selection. What I mean by anti-selection is because we have that concerns. So guy, for a person who is aware of certain very critical illness and then buying a life insurance policy, that's an anti-selection. Right? The way you screen every customer or every traveler in an airport, right? We know that none of them or very hardly one of them will have a concern, but you actually end up screening everybody, and that's the process which the life insurance also does to avoid this anti-selection. But the way we have now moved away is to ease this process without actually troubling the customer using data-driven underwriting model. And this is one of the major pieces which was possible just because we have gone fully digital. So what you spoke about, Sanjeev, as what do you mean by digital? One of them is the ecosystem that we have created. One is catered to the partners, which is like the distribution partners like Bajaj Capital, where they can again speak to their customers with data which is readily available on the go. Whenever they want to talk about Aegon with their partners, they can do it because it would be readily available to your handheld device partners or your handheld device sales representative. What it also does is basically there are other various supplier ecosystem for us in terms of data sources and everything, which is also taken care of, right? Through this mechanism is what digital allows us to take it to that level, and that's where the efficiency and the effectiveness and the ease of buying or the ease of the journey comes through.
Yeah. No, I think it's very well answered. And one tool if you can build up will be very helpful, where we can, or a person can put in his profile, his income, the type of income, and it can tell him what is the coverage available to him as per the underwriting rules. I think that is going to be supremely helpful. And for the gentleman here, I'll ask my team to take up this cover as a test case with Aegon. So we will test it out. What is the, due to through a rental income, what is the kind of coverage we can offer to you? So now getting into some technical questions. So Prachi has come up. There's a lady called Prachi Sharma. She's asked a very good technical questions. She says wanted your views on post-COVID reinsurance situations in India in the B2B segment, considering vaccination and records and low mortality. Do you see relaxation in underwriting norms and requirements? So I guess she's in HR in some corporate, and she's been facing concerns with group life insurance, which a lot of companies have been. So now with the COVID being over, and the reinsurers had become very tough during COVID, do you think the rates are going to start sliding, or they're going to remain the same? What's your gut call?
So if you actually notice, yes, it's more. So our interactions with the reinsurers, it's not just the COVID, because of which the rates got corrected. In fact, if you notice the life insurance, especially on the term protection, the rates that we had in India was actually the cheapest, even in comparison to a lot of other countries, developed countries. Okay? So we were one of the cheapest. Though, for example, even with countries who have very high in terms of health standards or the hospital facilities, even in comparison to them, our prices were much lower. So that correction has also happened. It's a coincidence that it happened with COVID. COVID was the trigger, of course. So it kind of happened with that. So the reinsurance or the rates which is now coming in, that will more or less stay. So I don't expect the rates to go down. It will stabilize at this level. So it's kind of a correction which has happened on those parts. As far as the underwriting process is concerned, because of COVID, see, we are writing businesses which are long term in nature. We are kind of assuring a term which is, say, 30 years, 35 years, right, which are long, or even 40, 45 years at times. So we are taking a long term piece. COVID, yes, from an overall impact perspective, it has kind of come down. But if you actually ask from overall still what the reinsurers are looking, or what we as real life insurance companies are still evaluating, is the impact of long COVID. Okay. So that is still under study. We don't have any specific mechanisms, and that's the reason why you would, in case if you have bought a recent life insurance policy, it only talks about a few questionnaire. It basically says, have you been recently diagnosed with COVID? In that case, is where we would want the customer to come back to us 6 months down the line, which is called as the postponement. Otherwise, it's kind of the underwriting process is very similar to what it was even the pre-COVID stage. So that has come back to normal, except for those three questions which pop up every time you buy a life insurance policy. So that will continue. Rates, as I said, this is the rate which will continue. I don't see the rates coming down as far as term policy is concerned. So it should stabilize at this level. And because we are talking about 30, 40 years commitment, the impact of long COVID, right? You would have heard a lot of articles also talking about it. That is still to evidence, but that is not getting priced yet. So that continues, and that's a risk which we are in that business of taking risks. So that will continue, and we will take that risk.
Yeah, especially with China's zero COVID policy, zero tolerance COVID policy, and COVID starting there, it's quite confusing to us that what do they know that the rest of the world doesn't know. So, so again, uh, again, a lot of very interesting questions, and I want to take the more technical questions because it helps people understand. So there's a question that there are now a lot of ads happening in the market that there is a zero cost insurance. So Satishwar, if you have not seen the ads, if you have seen the ads, I'll let you answer it. If you have not seen the ads, I'll explain to you what the product is, and maybe you can
So,
explain the.
Sanjeev, our product
Maybe
actually has that
those
feature. So I'm kind of aware of that piece. Our product also has that feature, which is called as the
okay.
special exit value. Okay.
Yeah, so just explain what exactly. So people are very confused. They say nothing in life is free. This is beautiful written by this lady. She's saying nothing in life is free. And when I read an ad which says that I'm giving you, you're getting free life insurance, rather than making me confident, it's actually scaring me. So can you explain it to me what exactly it is?
See, we again, as we said, we are talking about a 30-year plan, a 35-year plan, right? It's a long-term plan. That's a long-term commitment which also comes along with this. This is based on a lot of actuarial science which is actually drawn through that process and calculated. So uh, it's called as a special exit value. Let me explain what it means and what's the rationale behind introducing this specific feature in a life insurance policy. When you buy a term policy, you're basically doing a protection. The way you, Sanjeev, you said, the first thing that you need to do is protect your existing wealth and existing assets, right? So life insurance is specifically taking care of a protection, which basically says that it's protecting in case if I die, my future earnings and my family is taken care of because of my future earnings won't be there, but life insurance cover takes care of it. So that's where the risk mitigation comes in. But while we do that, there is another important aspect which each one of us should be doing is also start creating wealth. So Ideally, when I bought a life insurance policy, I've kept it aside, right? And the other balance, and it's a small amount, right? It doesn't basically, it's not that it's in lieu of savings. So it's a very small amount that you have paid towards your protection. But you should start building up your corpus. Now, by the time you reach the age of, say, 54, 55, and you have a huge corpus which has been created. And in that case is where this special exit value comes in. So that's the stage where you're supposed to check, have I created enough corpus? If I have created enough corpus, which means that my family is taken care of. And if my family is taken care of, I don't need a life insurance cover after that, right? So that's an option given by the insurance companies saying at age 55, please evaluate. Basically, in case you have created huge corpus for yourself, which will take care of your family's need in case the policyholder ceases or dies. In that case, is where you can say, okay, I will avoid my future premiums, but the insurance company has made it in such a way that you can actually also get your returns back. So it is true that you can get your return backs, but it's an option. It's an option at age 55 to decide whether I want to continue with the policy and pay the balance of the premiums for the next, say, 15 years, because largely it will be up to age 70, and continue with the policy because I have not yet created a corpus, or I've created enough corpus which takes care of any eventuality to me and my family will be taken care of. In that case is where we can stop the policy and we also pay the return back. So the pricing, because it's a long-term policy, it's a small cost to the overall premium that you pay every year, but it allows you to actually redeem it at the age 54 or 55, where, and you should actually take this call only if you have created enough corpus for yourself. So I have enough money, created corpus. The corpus will take care of my family's need if I am not there at that time. In time, I know this. I don't need this risk mitigation tool, right? So then I can actually cancel the policy and get also the premium back. So that's in short the zero cost policy. So it's a zero cost if you decide to redeem at the age 55, or you can continue with the policy say up to age 70.
Yeah. So, guys, this is also a product called term with return of premium, where if you survive, this is slightly more expensive than a pure term plan, which is a pure protection plan, where you pay a slightly higher amount, and it's not very expensive. There is a question given by one of our viewers that that this is very very expensive. If you calculate the IRR, it's very easy to do that. So what you do is you calculate the difference between what you are paying for a term plan where you get no money back and what you are paying for trop. Just the minus trop premium minus term premium is the investment amount, and that investment amount will give you the corpus which is equal to the premium paid. So you can see the IRR of the money. And generally, what I've seen, it is 5 to 6%, and also term has 18% GST, whereas this trop has a much lower GST, having an investment component. So if you take an arbitration of that, today it's actually very good to buy trop if you have the money available. So it's a good option for you to get. So this this life insurance policy that gives you back your money is actually something that is available. One type was explained by Satishwar. I have explained to you the other type. So these are the two types available. So this is what we wanted to talk about. Next is that we'll take Pranika's question. Pranika is asking, insurance is still a push product. One needs to plan and reach out to the country's untapped popular regions. What are the top three things to consider? And there's a question on Bima Sugam, that government is talking about Bima Sugam and that it will help increase penetration. People don't buy insurance on their own. They have to be made to buy an insurance. And guys, let me say why. Life insurance is a push product. It is not said that it's a push product because somebody comes and pushes it to you. The reason they say it's a push product is because somebody has to keep servicing you for 30 years or 15 years or 20 years. He needs to keep reminding you why you bought the product. That is why globally this push and pull product comes. Pull means where you remember what the product does for you. Push is when you have a partner who tells you what the product does for you. But I will let Satishwar answer further on this.
No, so yeah, it's a push product because it's a very complex or an emotional subject to discuss, right? Not everybody kind of gets up in the morning and says, I need a life insurance, unless until somebody has actually kind of uh, continuously feeded you or basically kind of cajoled you to buying into a life insurance. Because death is a subject which you don't want to generally talk about or at least think about, right? So that's where it becomes, you need somebody else to come and uh, help us realize the urgency and the necessity of having a life insurance product. That is one reason, which is the pure protection kind of a scenario. Savings, naturally, everybody wants to do savings, right? So why is savings still a push product? Because life insurance, again, we are looking at savings of a long term, and this is what I first space, right? Where we specifically in the immediate world we look for immediate gratification. We are looking for something to be saved and kind of consumed in the next, say, 1.5, 2 years or 3 years. Whereas life insurance savings is more long term. You're basically doing for something which is in the, say, 5 years, 6 years, or even 15 year, 20, 30 year. In fact, the products, if you want to do something specifically for a 30-year horizon, these are the kind of products which are available. And to get somebody to invest in these kind of products is where somebody needs to come and make that realization again happen in terms of having such uh, products in your portfolio, right? To start thinking about something which is due 15 years, 20 years from now. So those things don't happen, and that's the reason why you need somebody else to come and talk about it. That realization used to happen, and that is the reason why it's a push product. In the interiors, which we spoke about, and that's a very valid point, right? And this is where it's still a push product. It is still underpenetrated, and that's where the opportunity comes in. So we, as an organization, have taken the first step of using digital means to reach out to this space. But considering it's a push, is where our engagement with the partner at these various levels will continue, because the partner is in connect with the customer, right? And they can actually then convince the product, or at least ensure the customer understands why he needs a life insurance, a protection product, or a savings product. Because this why is something which is making it a push, because this realization doesn't happen on its own. So though as an industry, as well as and also as Aegon Life, we will do a lot of awareness session. But these awareness session needs to also translate into action. This translation into action is where the push component comes from. If you actually ask me, more than 99% of the people know what a life insurance is, right? If you ask anybody what life insurance is, they know that if I die, my family gets uh, cover, which basically takes care of financial needs. So nobody will get it wrong. Everybody knows the definition, right? Everybody knows this component of the life insurance product. But what doesn't happen is this getting translated into an action of buying a life insurance cover. The urgency and the necessity to have a life cover, that is lacking. And that is where partners, distributors come in, who basically help the customer understand that necessity. So a lot of questions which came in, and I also spoke about saying the the consulting can happen once you understand the need of it. It just can't be which product, right? And what is your actual need? Uh, the the solution also has to be catered to the need, and this again makes it a push product. To understand that need and subject, and basically cater the right product to those things. So two pieces how we want to address this is, of course, naturally partnering with partners like Bajaj Capital, and also a lot of partners who are uh, who have also made inroads into the interiors of the country, right? So various other pieces are reaching out, and this was possible because, for example, even e-commerce, right? E-commerce has actually reached out to the tier 3, tier 4 cities. Through that mechanisms can be reached on, and going digital enables us to do that, because the whole integration is through APIs, and that can actually come in, and the product needs to be pretty simple. Once we do that, they can actually engage and reach out to those things.
Satishwar, we need to take a couple of more questions.
Yeah.
So there is a question by Alicia Pechai. She's asking what's the difference between a saving plan and a fixed deposit. She's talking about a guaranteed return plan, and she's asking also in another question that what's the highest IRR that you guys are offering on your guaranteed return plans.
Okay. So the difference between fixed deposit and the savings product, especially a regular premium, the regular pay savings product, is paying it monthly. It's a simple product, right? You pay so many premiums, and at the end of the policy term, you get this kind of money back. So that's guaranteed, right? This is the payment every annual, monthly, whatever frequency that you want to choose, and you get a lump sum at the end of the policy term. How is it different from any of your recurring deposit? A pure comparison would be that is in case of a recurring deposit, if the premium stops in terms of say because of death, right? The the collection or the accumulation also stops at that stage. Whatever you would have accumulated at that stage, that's the money which you will get. But in case of an insurance product, and that is the example which I was talking about. In case of an insurance product, you will get the sum assured, which will be very close to the maturity value also. And this is the example which I was talking about, saying for my child's education, I know that when she is going to be about the age 18, she will need a specific funding for her future education, right? And I am not there, right? I started a life insurance policy, paid till the time for say 5 years, but I died. The corpus or the sum assured will still ensure that that is available for her education, which will not happen in say the recurring deposit because I paid 5 installments. That will stop over there. It will not give me that huge corpus that I want to create. Now, that's the difference.
Yeah. So basically, understand. Look, fixed deposit is 100% taxable. Guaranteed return plan is tax free. Typically, the premium you're paying every year, it will give you a 10-time cover. So that's so in case something happens to the person who's paying the premium, there is still protection available. And that today it is very easy for you to know what is the IRR, which is the actual return like a bank FD return. So you must look at the IRR, actual IRR that you are getting after all expenses. So you know what is the quality of product. Now there's a tough question by Ravi Shah. Ravi has asked that if insurance companies can give 50% commission to brokers, how is money going to grow? So Ravi, let me answer this question. One, it is not 50%. It is about 20 or something percent in the first year premium. And you have to understand if you are paying 10 premiums of 10,000 each, the 20% or 30% is only given of the first premium of 10,000. That's 3,000. After that, it's a minimal amount like 200 rupees or something like that. So if you take 9 into 200, it's 1,800 plus, even if I say, 2,000 in the first year, it's total 3,800 rupees, which is the cost of selling a life insurance product. And and this is a protection product, so this money what the insurance companies commission is typically paid from the protection amount, not the investment amount. So that is the corpus. So even if commission is there, you look at the IRR. If a product is giving you 6.5% IRR or a 7% IRR, or it's a pure term plan, what difference does it make to you what commission the person is getting? So it's like being penny wise, pound foolish. Yeah, ठीक है, I may not take a great offer because somebody else is getting paid X amount. Don't bother about that. Look at your benefit. If it's good for you, buy it. If it's not good for you, don't buy it. So that's my two bit there. There's one question on Aegon Life from Tejas Bhaskar. He's saying, if I have an Aegon Life Insurance, can I extend it online? Can I do it online and can I extend my policy? That means, can I change my coverage period from 75 to 85, 90? And there's another question for you, Satishwar, that today, do you offer a 99-year term plan? And why is that product there? And what is the maximum age you cover till?
So one is addressing the first question first. So basically, no, we can't extend the same policy. We'll have to go through the underwriting process, and thereby you'll have to get into a new policy for the balance, for the extended cover or the extra cover that you want to generate. So that will be there. And currently, we are catering for up to age 70. So we basically are looking at, because what we are saying is insurance, specifically the term protection, right, is a cover for your earning period. So it's basically a replacement for your income in case if the policyholder dies, right, to the family members. So it's basically your earning period, and you will largely the earning period is up to age 60. But yes, people do look at working all the way till 65 with the life expectancy also going up. We are actually seeing people also working till the age of say 65 and 70, and that's the reason why we have taken the cover up to 70. So that's where our current philosophy is. Yes, insurance is a risk mitigation tool, and we are specifically coming in for an income replacement in case if the policyholder dies, and the income generation capacity of normally an individual, the average or more than 99% of the individuals will be up to age 70. and that is where we have a maximum of up to 70. We will come with a policy which is basically taking care of kind of a legacy and up to age 99, but naturally that will come at a higher cost. So we will come up with that kind of a product. So during COVID is when we stopped that space. We will come up with that one, but naturally the pricing is not going to be what it was earlier, because it's kind of, and for a want of a word I'm saying, but it's going to be an assured payout, right? In all probability, there will be very few chances who will not. So naturally, the insurance company premium plus the investment income should be able to create that kind of a corpus. So from that perspective, it will be a costlier product. So it will be similar to a drop, right? Drop up to age 99, because it is like a drop. It's different. In fact, it's much higher than the drop.
No, understood, Satishwar. So, guys, we are over time. I'm sorry we can't take any further questions today. And there are a lot of questions that I want to work in operations. I want to work with Bajaj Capital. I want to work with Aegon. See, all of us are always looking to hire. Financial services is a very high growth sector. So just go to our websites and apply. For Bajaj Capital, whether you want to work in operations, you want to work in any other department, we are taking people through this program called IDWM. Because we believe whether you work in front office, back office, you need to understand financial planning and what customer needs, even if you're doing something else. So please look up this program, International Diploma in Wealth Management. I'll ask my team to run the QR code for that. Apply through that, and it will help you. And we pay higher salary. So whatever you're paying for this program, you'll make back in 2-3 months, and you will get higher salary, and you'll have a much higher chances of success. And believe me, in 5 years, you'll be at least double the amount a person who has not done this program. So that's the way to get into Bajaj Capital. Some final words from you, Satishwar, for all the viewers today.
Just to extending on that same count where people want to work with Aegon Life also, I would request please follow our page on LinkedIn. We do post all our openings over there, and we'd be very glad that we take it in our mission of actually ensuring that every Indian, specifically every winner in the country, is kind of covered. Uh, would be very happy of people getting associated with us. As far as just as a concluding remarks, Sanjeev, it's important for people, as you, I think you started off pretty well initially, right? So when you said the first thing that you need to take care of your protection of your wealth, right, which is health and life cover, and also your properties and those things, and which doesn't come at a huge cost. So that is something which each one of us should do. The first thing which I suggest people is the moment you get into employment or you start your own business, right? So basically you need a life cover, a health cover to be brought in. So you should do that as the first thing, and then also have this discipline of creating or saving money. So it's the, and that comes in with some lifestyle check. So what you earn every month, basically park a certain value, a certain percentage. It's not that you should not enjoy your life, of course you should, that's the purpose, but you should always start keeping a part of certain part of that income, and start early, because the effect of compounding plays wonderfully well. So certain part to be kept aside and should be invested, should not be kept idle in as cash or into the savings bank account, right? They should be invested. This discipline is a must, and this goes a long way in accumulating wealth by the time you reach, say, a 45, 50 years old. So that is very critical, because what people we need to realize is largely now the way we look at it, I am broadly saying there are largely three stages or four stages. The three stages, the first 25 years when you were actually a kid as a child, and then you got your education, and more or less at the age of 25 is when you start working. Then you will use that 30, 35 years to accumulate wealth for yourself. And then you will have another 30 years which will have to live where the earnings won't be there. This corpus that you have created, that is going to kind of help you over there. And Sanjeev, this is where I would like to come in, because the new tool that you have built in to kind of plan your retirement, I think that's wonderful. It's very exhaustive. It kind of helps in terms of the corpus that you have created, how you can deploy. So that's a wonderful tool. But that's
Yes.
important. You have to start early. And that's my advice, saying it's more important wherever you invest, okay, whichever instrument. It's not just life insurance or mutual fund or fixed deposit. It's important that you get started. There is never a right time. The time is now. You should start doing it, and start doing it very regularly.
Yeah, guys, and if there is anybody, like as Satishwar said, we have an amazing tool for retirement planning. and you have to look at it to understand what planning means. So I would recommend, if you have any person who's close to retirement or has recently retired, please look at that tool. Guys, if you can put up the QR code for that, or maybe it's we are just about to finish. So just go to Bajaj Capital website and just send a message on the chat, and we'll get in touch with you. The point is that it's a beautiful tool, and that's what is all about, is helping you understand your needs and helping you get the right product. Thank you, Satishwar, for taking out time today. We are much over time today, but thank you for being with us, and thank you everyone for joining us today. It was great having you, and thank you for continuing to support FINtastic Talks.
Thank you, Sanjiv. Thank you very much. Thank you for organizing this. Thanks.